Showing up on the first page of Google might not be the best for everyone. But for business owners, it is.
Hey, good afternoon, everyone. Turn the background music down just a bit. If you don't mind, give me a thumbs up in chat just so I know that the mic is working well, or if the music is too loud. We'll give it some time for people to hop in here, and then we'll get going. So today's stream is only going to be on YouTube. There's no Discord stream today. Should probably let these guys know that it's only going to be on YouTube. Let me send that out real quick. How is everybody's day going? How is everybody's week going? It's good to see you guys once again. I'm going to try to make this a weekly thing. Normally it's been on Wednesdays, but I usually let the Discord, they usually get to decide which day works best for them. If the music is too loud in the background, just let me know to turn it down. Today's stream was going to be a more interactive one, so I wanted to go back and forth with you guys. That's why I put some music on in the background for the mean times when we were having our discussion. Let's put it down another 2 notches. See if maybe that one works. Put it down 1 more notch, maybe that'll work. So what's up, everyone? Happy to see everybody in here again. I hope everybody's week is going well. We have CPI yesterday. We have FOMC coming up tomorrow. So pretty busy week in the market. On my end, I haven't even taken a trade yet this week. I'm a firm believer in less is more, quality over quantity. CPI is not something that I even care to deal with. FOMC is another thing that I don't care to deal with. The conversation's not going to be focused on a specific topic today. I want to be interactive with everyone here, so I'll probably ask you guys for the questions, and then we'll go over the information from the questions that are being asked. Just to point out the comment I just made on FOMC, you can clearly see, New York session is a whole lot of garbage here. Right, if this is the 9:30 open here. Let me fix this. If this is the 9:30 open here, right? We're looking for some kind of model to form after 9:30, at or after 9:30, right? And I mean, what is this? This is a whole lot of nothing. It's just small tight range. They're just building liquidity on both sides of the marketplace so that when why does that keep happening? When Jay Powell goes up and starts speaking, that he can take this thing either way, so this is just a time to be patient, and you'll see this happen over and over again. So with more experience, you'll see days like this are clearly lower probability. So just a matter of discipline, just a matter of patience to, not participate on days like this. Yo, alright, so I'll start. Gave like 5 minutes for people to join. People probably will end up showing up throughout the stream. Once again, I'm going to make today a little more interactive. I would rather engage with chat some more this time instead of focusing on one specific topic and going on a certain rant of some certain topic. I want to make sure everybody's questions are being answered, so obviously everyone is at a different part in the process than one another. So if there is any certain topic that you are struggling with, if there is any certain criteria that you are struggling with, put it in chat. Let's talk about it. It's not going to be an hour-long conversation because I need to get to everybody in chat, but I will definitely answer questions, go back and forth, have a nice conversation today, so that we can go over some more information. Hello from Las Vegas. Hello, Braden from across the world. Yo, Ash, can you go over time frame alignment? Yeah, so let me pull up a screen real quick. Let me pull up the time frame alignments. Alright, can you see the time frame alignments? I just pulled up another screen. I'm just not sure if the stream follows what's on the monitor or if it's a certain browser. It should show time frame alignments. I'll go over the time frame alignments real quick. Time frame alignments, one of the keys to finding clean market maker models is understanding the time frame alignments. They form in relation to the time frame of the PD array. Time frames are directly linked to one another. So for higher time frame traders, these are probably swing traders. They're probably going to look at monthly PD arrays and then look for daily entry functions. Another swing trader would also use either a weekly PD array for a 4-hour entry function. Same thing with the daily PD array for a 1-hour entry function. Then you get more into intraday stuff, 4-hour PD arrays with 15-minute entry functions. You get 1-hour PD arrays for 5-minute entry functions, and then scalping would be more like 15-minute PD arrays for 1-minute entry functions. So now the thing is you have to understand how to use the time frame alignments. You don't mix the time frame alignments. You don't use a daily PD array for a 1-minute entry function. So if you don't have these time frame alignments, either take a screenshot of this right here and save it for later, because these time frame alignments go with each other. You don't mix them up. All right, so if you are a intraday trader like myself, use the 1 hour PD arrays for the 5-minute entry functions, right? So we can go into the charts after this and show examples, but you are using the higher time frame PD arrays to find lower time frame entry functions. Now when I'm saying that, what I'm saying is, for example, I use the 1 hour for my higher time frame, I use the 5-minute for my entry functions. So on the 1 hour chart, I am looking for FVGs or swing highs or swing lows. Those are the PD arrays that I'm using to find my entry function. Once price is at that area of interest during the opening times, then I'll look for my unicorn model. So the 1 hour PD arrays are swing highs or swing lows, or FVGs. Once price is at that area of interest during the opening times, I'm looking for 5-minute unicorns. Here are your time frame alignments, and you do not mix the time frame alignments. What's up, what's up? What's up, Bash Trades? Hello, good afternoon. Hi. Yes, we can hear well. Okay, good. Good afternoon, Ash. Background is slightly loud. Let me know if it's still loud. I did turn it down. Hopefully the volume's at a good point now. Let's see. Good to be here again. Good to have you guys. I'm glad to see everybody in here. Like I said, we're going to do this weekly, so we're going to continue to learn, continue to practice. It's just repetition is the key. We have to keep doing this over and over and over until we get to where we need to be. Yo, what's up? What's up, Travis? Izzy from Discord here. Izzy, what's up? Are we... Oh, I scrolled down too far. That happened way too quickly. Are we going to have streams from next week too, since the market gets slow after the 15th? Yeah, I'm doing weekly streams. I have been doing weekly streams. The market is going to do whatever it wants to do, so that's not really going to change whether I have streams or not. Every day is a learning opportunity. We don't need to execute. We don't need to execute to learn, you know? So we'll do this weekly. We'll even decide if we want to turn it up a notch, maybe do it 2 times a week, maybe do it 3 times a week. We'll see. Do you trade other models than the unicorn? No, David, I do not trade any other models. So less is more, quality over quantity. Like when you go into the market and you're not sure of even what you're looking for, you're trying to make something up compared to the information that is being presented. That's when you don't really have clarity, right? So for example, right, put it this way. If I'm bullish, right, then I'm only going to look for long positions. If I'm bullish and I only use the unicorn model, then I know exactly what I'm looking for. Therefore, I know what is and what is not a trade. So if I see a bullish unicorn at New York Open, I have confidence in executing, right? Exactly what I was looking for is now on the screen, so I'm going to take it. It deters all of the other noise. It makes things very clear and concise. I'm not saying using any other models is wrong. I'm just relaying what I do. It provides clear and concise information for me, and it blocks out all the other noise. So I only use one model, and I'm more than happy to only be using one model. Am I going to take a trade? I'm not looking to take a trade. If you've followed me, I've already said that FOMC is not a day that I participate in. It's also lunchtime, so it's even more low probability. So I don't know if you're just spamming that question or what, but I'm only going to answer that once. I know there's a video about draw on liquidity, but would you mind highlighting how we find it and which time frames with a live example? Okay, so let's take a look. First of all, if you were in my Discord, you would have seen this. I already called this out. This was my draw on liquidity for the week. So it's already been achieved. So I love to see that the bias was correct. I love to see that the draw on liquidity was correct. There are two draws on liquidity that I focus on: swing highs or swing lows. Right, here's a swing high. It is a swing high by definition because there are lower highs on each side of it. Right, so swing highs or swing lows are a form of draw on liquidity that I use, and FEGs are a form of draw on liquidity that I use, right? So I've marked out one of each so you can see. Here's your FEG, and we'll make sure to type everything out too, just in case anybody else shows up later on. All right, so you have two different areas here. You have an FEG that could be used as a draw on liquidity, or a swing high or a swing low that could be used as a draw on liquidity. All right, so heading into the market this week, again, if you don't believe me, just go into the Discord and you'll see it. This is, let's go one more day because this is Thursday. Okay, so here you have it here. This is what the market looked like heading into Monday. And when I start the week, I provide my bias to the Discord. So you'll see on Monday this exact screenshot that you're looking at here. You can see that, and in the screenshot it specifically had stated, this FEG is providing a nice area of support. You can clearly see that price is bouncing off of this FEG in multiple different occasions. And what would it be reaching for? If it's not reaching for an FEG, I'll be looking for it to reach for a swing high. Right? So here's another thing to take into consideration. You want to be on the same side as the higher time frame order flow, right? So notice how I went to the daily chart to get my draw on liquidity, because I want to be on the same side as the higher time frame order flow. Right, so in this case, my draw on liquidity was here, this swing high, right? And when that swing high is met, then my bias is complete, and the narrative for me to create a bullish position would be complete as well. So if you are correct and it was completed, after it was completed, that doesn't mean instantly rush into something else. That means wait until the information is clear again. Right? Or you got to take advantage of the move from here to here, and maybe you're, profitable on the week and you don't even need to trade again. So it's a matter of what has happened leading up to that, but these are the two draws on liquidity that I use, and I get them from the higher time frame. Swing highs or swing lows, or FEGs. In a couple different videos, and I'll link it after this, I speak about the internal to external relationship, right? So you would know if you watch those videos that FEGs are internal. Swing highs or swing lows are external. You would also know that I have stated in that video that when price is at one of these locations, I look for it to move to the opposite location. And that's why I put the arrow here. It was at an FEG. So now the next place, the opposite location, would be the swing high. So that's why I'm looking for this to be the draw on liquidity. Right? And you see you get it here, and then you even get expansion through it. So the bias was correct, the draw on liquidity was correct. You could have taken advantage of long positions either one of these days. Okay, so I keep losing my spot in the comments. Let me get back in there real quick. Trinidad saying hello. Hello. Ash, love from India. Hello, hello. Thank you for joining. We can see it. Okay, perfect. Do me a favor and mute this guy. I'm guessing it might be the guy that keeps repeating himself. If you have a breaker with wick 2 times longer than the body, is it still valid to use? Yeah, the formation of the breaker doesn't change. It's always going to be the same thing, whether it's more of a body or less of a body. Right, so I'm going to point out a bearish breaker, then I'm going to point out a bullish breaker. Bearish, you have a move up, then you have a move lower, and this is the leg that you're going to find the breaker in, right? The second move, you have this move up, then you have a move lower. In this move right here is where you will find the breaker for a bearish breaker. You want the lowest down closed candle before, right? When I say before, once this low is put in right here, everything before this low, you need to find the lowest down closed candle before this move up that takes liquidity. Right, this is a stop hunt because we're running above this high here. So once we run above this high, you get a stop hunt, and then you need displacement through the breaker. That's going to be found right here. Right, so you want the lowest down closed candle before the leg up that took liquidity. It's for a bearish breaker. You're going to find it in this leg here, right? And you're looking at the closing price. You're looking at the closing price, the lowest down closed candle in this leg here before the leg up that took liquidity. So it'll look like that. And it's the same thing, but vice versa for a bullish position, right? So it's a move down, right? And then this is the leg that you'll find the bullish breaker in. It's the highest up closed candle before the leg down that took liquidity, right? So once you get that displacement through the breaker, right, you're looking for closure through the breaker. So once you get closure here, right, so if this is the breaker, once price closes through the breaker level, right, which will be found in the leg before the leg that took liquidity, once you get a closure through that breaker, right, that's when you're looking at this level. That's when you're looking at this breaker level. You want the FVG to be aligned with the breaker, right? And then you're looking at entries like this, right? That's what it'll look like. And I have years of documentation of this. So if you're not in the Discord, hop in the Discord, and you'll see it happening every single week because I document it every single week. So bullish and bearish breakers. So the wick doesn't make a difference. The body doesn't make a difference. You need to have the closing prices, and it needs to be before the legs that took liquidity. Love from Pakistan. Love that you guys joined. Thank you once again that you're here. We're going to keep learning and working every single week. You will find me here working. You will find me here documenting. It's not going to stop because, I have a place that I'm looking to go to, and I'm not going to stop until I get there. So for whoever else is looking to learn and practice, join me on the journey. Yo, Ash, the live stream isn't available on Discord. Yeah, so we're only doing the live stream on YouTube today. I wanted to put all of the comments in one section because I wanted it to be more interactive. Instead of it being like lecture, I wanted to talk with you guys. I wanted to have a good conversation and make sure I'm answering questions because I know everybody has, their own place in terms of where they're at in their progress. So I wanted to make sure I'm answering more questions this time instead of lecturing, and I needed to put all the questions in one location so that that could happen. Are you always trading in the direction of your daily bias, or will you take counter trades? I do not trade against my bias. I would rather be wrong in my bias and figure out why I was wrong than counter trade. Right, so I can go over ways to create a bias as well to help you create a bias, but the reason behind it is because I want to, one, know why I'm right or wrong, two, block out all of the other noise, right? So if I'm bullish and there is no bullish entry function, then I know there's no trade for me. It's easier for me to understand what is and isn't a trade because I'm only looking for one certain thing. And I'm completely okay with being wrong, right? So if I get the bias wrong, if I'm bullish and the market just keeps going lower the entire day, then there's probably not going to be a bullish entry function, which keeps me out of bad positions as well. So I would rather block out all of the noise and just look for one specific thing. Ash this week was honestly been really terrible, and I feel so frustrated. Blew my account, feeling so down, thinking if this will ever work out, please help. So don't fall into the emotions. If you don't think everybody in this chat has already blown an account, then I would say you're sadly mistaken. Everybody blows accounts. This is why we need to focus on risk management, right? There's no reason to use all of your money the very first time you try using it. You need to focus on risk management. It's never going to happen on your first try. It's probably not going to happen on your second, third, or fourth, right? Like, think about how many times Michael Jordan had to shoot a basketball before he ever even became a champion. He had to go through high school. He had to go through college. He had to go through many, many, many years of trying and trying before it ever worked for him. So try to get the psychology right and just risk accordingly, right? So focus on learning instead of risking. Strive to educate yourself and practice. Don't think about the money. I know that's hard to say because that's why we're here, but you have to realize that, this is not going to happen on your first try. It's not going to happen on your second try. And the only way that you even get 3 or 4 tries is if you risk correctly. Don't ever, ever go all in. You have to give yourself enough time to learn. The way you will do that is risking accordingly. What happens when your 1 hour swing / FEG is also a 4-hour FEG? Can you take an entry? Yeah, you can, as long as your time frame alignment is aligned, right? Like, so if there's an entry function on a 15-minute and your 4-hour swing low is also your 1 hour swing low, it's the same thing. Yes, I understand it's the same thing. And the criteria is still confirmed, right? So it doesn't matter if it's the same swing or not. The criteria just needs to be confirmed. If it is, and you're aligning yourself correctly with time, then go ahead and take the trade. Nice PDF and great education. I really appreciate the generous comments. It is a form of repetition for myself. Every time that I say these things or work on these things, it's practice. So that's why I do it. And I'm trying to add value for everybody else. If I document publicly, then other people could learn from it. If I don't document publicly, then I'm not really making an impact on anybody else other than myself. Hi Ash, new subscriber here. I'm looking to trade the London Open and hope to make 2 to 3 trades per week. How many assets would I need to follow to achieve this? If you're looking at London Open, it's just a matter of knowing if you're trying to trade futures or currencies. If you're going to do FX, right, currencies, I would focus on EU or GU. If you're going to focus on indices, then I would focus on ES and NQ. You only need 1 or 2 assets to, get 2 or 3 trades in a week. I really only focus on ES and mainly NQ. And there's trades that happen every single day, let alone every week. Two trades in a week is my maximum, and I normally get 2 trades every single week just looking at NQ. So you don't need a whole laundry list of assets. Focus in on one thing, get really good at one thing. What is your method for backtesting? I don't think backtesting is a good idea. I think showing up to the live market and working with the live market is your best way forward. You need to see price live. You need to see how it feels while it's moving. It's never going to look the same as it does when it's live. You're not going to feel the same as it does when it's live. Right? Like backtesting, even if we were to backtest right now, I already have some kind of idea of what has happened throughout this time, right? Because I've been here watching the market. So I'm not going to backtest because you might have some kind of inkling of what the information has already done, and it's not going to move the same. So I'll go on a chart real quick. So I'll show you what I mean by it's not going to move the same. Look at how the candles are being formed right now. Right, so it is slow right now. Yeah, that's probably because of FOMC, but notice how it's going up and down and up and down and up and down, right? Like it going up and down and up and down and up and down is going to change the way you feel about it. Right, now let me show you a backtest. Like a backtest would be part of a replay, right? So if you're waiting to see what the next candle looks like, it just shows up on your screen. It doesn't go up and down and up and down and up and down. You're not going to feel the same because the information is instantly present. You're not going to see what a candle looks like as it's being formed. And you're going to feel different emotions while that happens. So if you ask me, show up to the live market and demo trade if you need to. If you're in the learning process, go to paper trading during live market actions. Hey Ash, what's up? Evil Eye, nice to see you. Hey Ash, what's up? Crypto Queen, nice to see you as well. Thanks for hosting these sessions. Yeah, we're probably gonna even start hosting them more often. To be honest, I just want to continue to bring value to everybody else. It's more direct in the communication than trying to type over text. It's much better for examples because I could pull up the chart and get right to the conversation right here instead of, taking screenshots and trying to respond via text. Please don't stop weekly streams. No, I don't plan on stopping them. We have been doing the weekly streams each week, so we are definitely going to continue to do that. Which pair are you looking at? I'm looking at NQ right now. You can see the symbol up here. We have the March contract up because the volume on the new contracts are more than the volume on the old contracts. You could either use the quarterly contracts or you could use the continuous, right? This is the continuous is here. NQ1 would be the continuous, and NQH 2024 would be the current monthly. Can we look at some examples? Yes, we can look at some examples. I'll pull up some examples as we start talking here. So we'll just go through the analysis and, go through the pricing. We'll get some examples going here. I don't know what the deal is with mashup. Let me see if... I don't know how to hide him. I don't understand why he is spamming the same question. So give me 2 seconds. Put timer, put user in timeout. Sure, maybe that'll do it. I don't know how he got in here spamming away. Maybe the timeout will help. maybe that will help. If he pops up again, just let me know. Not sure if that's gonna make him leave for a while or just for a little bit. But back to the conversation. Can we look at some examples? There's nothing here from today, so I'll go back to yesterday and we'll take a look at yesterday. You know, just a small tight range because of FOMC. Real disgusting indecision, choppiness. This is the reason why I don't deal with FOMC. It's just not worth it. We'll go to yesterday's open. We'll take a look at yesterday's open so that we start getting examples as well of the model. I believe you're talking about the model that I use, so we will start with that. So this is, let's take a look at the hourly first. All right, so this is what the market looks like as New York is opening. I am a New York Open trader, so I focus on New York Open, and I mainly use the 1 hour to 5 minute time frame alignment. So you can see here, price is currently located at a 1 hour area of interest. This is a bullish fair value gap that I'm outlining here on the hourly, right? Bullish fair value gap. So seeing that price is at a bullish area of interest, right? So, okay, and here you go again. This is the reason why backtesting isn't very good compared to doing it live. I just pointed out that we were at that area of interest, but because I went down to the lower time frame, price isn't there yet. So that's, again, the difference between live testing versus back testing. Either way, we'll get to 9:30 here. All right, so here's 9:30. Right, so it's approaching a bullish hourly fair value gap. I'll take off one of those lines so we can just see it, and we'll annotate everything. This is an example, and this is an example from yesterday. Again, hopefully you were talking about the unicorn model. That's the example I'm going over now. So the daily is clearly bullish. I should have started with saying that. Daily is clearly bullish. Therefore, going into New York Open, I would want to be looking for a bullish unicorn, right? So if I use the 1 hour to 5 minute time frame alignment, what I would want to see is price at New York Open being at an hourly swing low or an hourly bullish fair value gap. So that's what I did before the market opened. I'm outlining that area of interest. You can see it written down right here. You have an hourly FEG here, and you're just simply waiting. So New York Open just occurred, right? It hasn't got to the area yet, but you can see that we're getting a stop hunt into that location, right? So a stop hunt is a run below a swing low, and you want the stop hunt to happen into a fair value gap, right? So here's the hourly fair value gap, here's the stop hunt. We'll write this out as well. All right, so now you can see that we've tapped into the higher time frame liquidity here, right? We've touched the hourly fair value gap, and we had a stop hunt into that area. So you are starting to confirm your criteria for your entry function. You would need, again, this part's never going to change, and we talked about this earlier in the conversation, the highest up closed candle before the leg down that took liquidity. It's always going to look like this. This is what a breaker is, right? So now, since there's consecutive closes, here is the breaker here, right? The highest up closed candle. And if you can't see the closing prices, it's right here on the top of the screen. C for closing price. So you can clearly see that this is the highest up closed candle before the leg down that took liquidity. If this is the leg that took liquidity, right here, from here to here, right? You need the highest up close before that happened, which I'm hovering over right now. Since there are consecutive candles to the highest up close candle that took liquidity, it would be all of the consecutive candles. Here's your breaker block, right? So we've gotten the higher time frame area of interest, we've gotten the stop hump, and now you need displacement through that breaker block. You need to see price go right through the breaker block with no trouble. Okay, so Hasn't happened yet. So you're just waiting. You're just waiting to see if you can confirm the rest of your criteria. Okay, now you see displacement. Notice how the candle had no issue closing above the breaker block. Right? You don't see a large wick here. And you can see that this is a larger candle than the majority of these candles here. This clearly looks like displacement. It clearly and decisively closed above the breaker block. But you're not done with your criteria yet. You still need an FVG to align with the breaker block. Right? So here is your confirmation candle right here. As soon as you see that we have an FVG aligned with the breaker block, as soon as you see all of the criteria completed, right? This is the very first moment that all of your criteria is completed. We waited for New York Open. We had a stop hunt that occurred into a higher time frame area of liquidity. That stop hunt occurred at New York Open, 9:30, right? After the stop hunt occurred, we got displacement through the breaker block. Decisive displacement, had no problem closing through it. And then here's your confirmation candle, because we need to have an FVG aligned with the breaker block. Right, so this is the very first moment in time that you'd be setting a limit long, right, for the beginning of the breaker block. You can see the closing price here, so you can see where to set the limit order. 16,463.75. Right? R. Oh, what just happened? Well, that was weird, but we are still here. It's the very first moment in time that you could be setting limit orders for a long, right? And you'd be setting the limit order for the beginning of the breaker block, which you can get from the closing price here, right? And then your stop loss goes below the breaker block. And now you're just waiting. Do I get filled? Do I not get filled? You're putting your stop loss in. You're putting your TP in. And you're just waiting. God dang it. Pressed the wrong button. Alright, back to it again. Again, this is your very first moment in time that you could be setting limit orders. Now we just wait to see if you get filled, and there you go. On your very first chance of getting filled, you get filled, right? And it bounces off the location nicely, so easier to hold because you're in the green. Now it's just bouncing at the location of entry, so you just break even right now. You're just waiting. This is where you really have to manage your emotions. If you're not capable of managing the emotions, just set the limit orders in. Don't look at it. Because you don't want to be deterred by a position that could be correct, but you weren't able to hold on to it long enough because your emotions deterred you from it. Right? Either allow it to be invalidated, or don't allow your emotions to invalidate yourself. Your invalidation's here. Right? Your stop loss is placed. It either hits your stop loss or it doesn't. Right? While it's bouncing in between, don't let that change any of your management because of the way you feel. Okay, now we're profitable, right? Nicely green. So a lot of the times you'll see a lot of people now raise their stop loss above entry, right? They might put it up here because they don't want to allow this position to become negative again. Forgot to finish the annotations, right? Breaker block. We'll use this as an SL, right? So what I'm trying to say is, as soon as you become green, don't become so fearful that you need to raise your stop loss into profit because you don't want it to go red again, right? Because there you go. You just got stopped out, and you probably only got a couple bucks because you put it right above entry. Even though your stop loss should be here, and the idea has not been validated or invalidated. TP is up here, right? Stop loss is here. Entry is at the beginning of the breaker block. Nothing has been validated or invalidated yet, so don't allow your emotions to push you in any either direction. Alright, so you're still just holding, and now you're still at break even. Still at break even here. Becoming profitable again. Becoming profitable again. Again, same exact thing as I said the first time. Don't be so fearful at this point in time, right now that you're becoming profitable, to raise your stop loss into profits because you're scared of letting yourself see any red numbers again. Right? Nicely profitable. Nicely profitable. Just kind of floating here. See, and this is what I'm talking about. Now you're getting close to getting stopped out again. Right? So again, it's the same exact conversation as the first one. Don't allow your emotions to deter you from the overall goal. You know, set your limit orders. Be strong in your execution. Know what you're looking for. Because if you're going to let your emotions to deter you, then, you know, you're going to be feeling a different way each time you take a position. Some positions are going to go better than others. Some positions aren't. Don't let your emotions deter you from the model, right? So your stop loss would still be here, your TP would still be here, right? And now we'll just let it play out. So you got to hear my little greed and fear conversation, but we'll let it play out now, right? So it looks like a couple different entry. To me, this looks like multiple different entry opportunities. 1, 2, 3, 4. And now it starts to play out. Alright, so TP is coming up here. And there's your TP there. So, and this is what, that's the whole point of the conversation. What I was trying to get at is, here's a clear example. Somebody asked for an example, and now we ran through the steps of defining the model. After running through the steps of defining the model, I was trying to go through the emotions that you might occur that might change your management. Don't allow those emotions change your management. That should be defined beforehand, so you know exactly what you're looking for and you're knowing exactly how you're going to manage it. Give me look at an example. A couple of days a week would be awesome. Yeah, we'll definitely get more streams going. It's been once a week for a while now. Maybe we'll bump it up to 2 times a week, maybe 3. We'll see how it goes. We'll take it 1 week at a time and go from there. I'll definitely make sure to tell everybody if we change. As of right now, it's been on Wednesdays during lunchtime. Well, I guess actually it's only lunchtime for me, probably. It's 12:45 p.m. Eastern Standard Time where I am. I know we have a lot of different countries in here, so. How do you combine the higher time frame alignments with the open of 9:30? You should have probably just got that answer from that example I just stated. If I'm using the hourly to the 5-minute time frame alignment, as New York Open is happening, I'm looking for 1 hour areas of interest, and I'm outlining them as New York Open happens. During this example, you saw me outline a 1 hour FEG. That happened as we were going into New York Open. When New York Open happened, we came into that 1 hour FEG, and we got a stop hunt going into it. So all of our criteria was met there. Hi, can we use unicorn with projection? Standard deviations, if that's probably what you're referring to. You can if you want to, right? So the standard deviations go on the leg that took liquidity, right? So from the swing high to the swing low, that took liquidity. Now let's see what the standard deviations do here. Let price go a little higher or faster. So it does look like we hit our standard deviations here, right? So right? So if you wanted to use your standard deviations, you can. It goes on the leg that took liquidity. I personally don't use standard deviations, but you can see it working here nicely, right? It goes right to -2 standard deviations and then starts to consolidate. So very clear and concise with the standard deviations. Once you see closures above 0.25, then you can think that we're going higher, but let's take a look. Do we get any closures above 0.25? No, we're not seeing closures above 0.25. So this, if you know, for any of the people that know about standard deviations, this is an area of retracement. If you don't see closures above 0.25, then you know this might be an area of resistance. You might get a little bit of retracement before you do. That is nice to see. I mean, look how clearly it respects the standard deviations here, right? First time it goes to -2, and then second time it goes to -2.5. I personally don't use standard deviations. A lot of other people do. You can if you want to. It's just not something that I use. 100 likes for Ash, at least. Come on, guys. Jason, I really appreciate that. Yeah, if you haven't liked or subscribed to the channel, please subscribe to the channel. Like I said, we're going to be doing this weekly. So if you want to show up and learn and practice every single week, we will be here. So turn on the notifications, subscribe to the channel so you know when we go live or when the next video gets uploaded. I'm also uploading videos in the beginning of each week, so on top of live streams, I'm also uploading educational videos as well. So there's usually 2 different videos that happen each week. To get notified of those videos, all you gotta do is subscribe to the channel and you will be notified of when that happens. What is your method for backtesting? So I don't know if you were here in the earlier part of the conversation. I don't backtest. I don't think backtesting is a good idea. I think you should show up to the live market and forward test. I think you should be doing this live with live information. I personally don't think backtesting is good. I'd rather be here during the live market so I can see price moving live. Can we use unicorn on Asia session? You can use unicorn on Asia, London, or New York. Do not use the unicorn outside of the hunting hours, right? So after New York closes, wait until Asia comes up again. Do not use outside of hunting hours. I'm new here. I would love to hear a quick summary on your trading background. So my trading background, Jim, thanks for asking. My trading background, I started with options. That was like when I was first out of college. I tried options trading. That didn't go well. You know, I had winners, I had losers, but overall, didn't make as much money as I do now. In the first year, I wasn't even profitable. It was like a roller coaster. I mean, it was up, down, up, down. Until I really understood like options is too much leverage, I, didn't really make any substantial progress. The second year was crypto. I put some money into Ethereum. That was pure luck, to be completely honest. I'm not going to sit here and say like I knew what I was doing. I put some money in Ethereum and it absolutely popped off. I mean, I bought the thing at like $200 and it went to like $4,000. So that was luck. I'm not even going to say like that was strategy or anything. That definitely caught my eye in terms of trading, because now, you see the ability to make money, and now you're like, well, now I want to learn more about it. So after that happened, I started researching more and taking more consideration into education and learning instead of just trying. That's when I found ICT. My third year was ICT, and I had studied every single one of his videos. I mean, quite literally had documentation on every single one of his videos. So I spent an enormous amount of time with ICT. That is how I found this model. All of this information comes from ICT, so I'm not even here to take credit. I'm just here to journal my own experience and help others along the way. We rise by lifting others, right? So if you If you're not open to sharing information, that's completely fine, but there is value in providing information for others. You know, people don't have others to ask questions when they're first starting. So I don't mind answering these questions because I wish I had somebody to ask questions to when I first started. The 4th and 5th year was with this model, and ever since I've only traded this model because of the profitability that came with it. Started passing prop firm challenges, started getting funded, started making withdrawals, started becoming profitable. So it took until the 4th and 5th years to become profitable, and now I'm in my 6th year. So for anybody that's in here that thinks that they're going to become profitable in their first year, I'm not saying it's not capable of happening. All I'm saying is give yourself more time. That's all I'm saying is, you know, every time I have this conversation, I think about the doctors, and that's usually the example that I bring up. Like, doctors have to go to school for like 15 years before they can even get a day job. So they are learning and working for years and years and years before they even get paid for it. Yet everybody wants to come into the trading industry and make money in their first month or in their first year, and they usually leave if they don't. It just doesn't seem right. Give it more time, be patient with yourself, strive to learn and gain as much experience as you can. When we trade this asset, so you can see it here, UTC5. All of your charts should always be on New York time. It doesn't matter where you're from, doesn't matter what country you're in, doesn't matter what asset you're trading, doesn't matter what session you're trading. Your charts should be set to New York time. FEG are marked by the body or the candles. This is what an FEG looks like. An FEG is when the candles that are surrounding a displacement are not overlapping. Right, so look at the high of this candle, right? This candle right here. Look at the high. I'm going to mark it out. The high of this candle is not overlapping the low of this candle. This empty space from this displacement here is the FEG. Right? Bullish FEG. Right? And I'll mark out a bearish FEG real quick too so you can see the difference. The high of this candle right here does not overlap the low of this candle here. This is a bearish FEG here. Okay. Appreciate the draw and liquidity breakdown, Ash. Yeah, anytime. Thank you for joining once again. And, you know, if we don't get it this time, show up again next time so we can keep going over this information. It's not like a one and done scenario, right? We got to keep working, we got to keep learning, and repetition is going to be the best way forward. How did I find the 1 hour PDA right on that trade? You're just looking for previous information. Let me go back to it. Right, so we were looking at, this is the information we're looking at. Right, so if you're looking to the left, right, point out the FEGs. If there are any FEGs on the screen, there's one here, right? That's one FEG. And there's one here. What is the difference between these two FEGs that I'm pointing out? The difference between these two FEGs is this top one here has already been used, right? It was used on this candle here. This FEG here, this is the first time it's being used. So it being unmitigated is something that draws my attention. Since it has not been used before, that makes me more interested in it. That's why I'm specifically looking at that one. But all I'm doing going into New York Open is either looking for swing highs and swing lows or looking for FEGs. And I'm looking most recently. I'm not zooming out and going all the way over here. You know what I mean? I'm looking at the most recent information and using it. Can we use a unicorn on Asian session? Yeah, I do. I already answered that one. We can use the unicorn during Asia session. Because the FEG was not filled all the way, yes. So that is why I chose that one. I would rather be using unmitigated areas of interest. In which pairs do I participate in? I participate in NQ and ES. I focus on New York Open and I focus on NQ and ES. Less is more, quality over quantity. You do not need to have a whole list of assets to be looking at. Hello Ash, new follower. Hello Ash, I'm a follower of your model. Works quite well, thanks. Thank you. Again, it's from ICT, so everything he has taught, I have listened and documented, and that is what you're getting here. I mean, that's where it came from. I'm just here documenting the journey and trying to provide as much value to others as I can. Give some likes. Thank you, Seeker. I really appreciate that. Have you heard of flips? Photon describes this as a flip. I don't know what a flip is. I don't plan on adding any other concepts to the model. I don't really need to focus on anything other than completing the model. So I would have to say no, I don't know what a flip is. What happened to the PDF you were going to share? If you go into the description of the video, the link to the PDF is there. I shared it on YouTube, I shared it on Twitter, I shared it on Discord. You can find the link to the PDF in any of those locations. My biggest problem is liquidity part. I understand all the other part, but it looks good when you do, but when I try, I get it wrong. So again, the internal to external is what I focus on in terms of liquidity. When I get liquidity, I get it from the higher time frame. And when I'm looking at liquidity, when price is located at one area, I look for it to move to the other. So the first example was this bullish daily FEG, right? Higher time frame. And then it was located at the bullish FEG, so I was looking at the swing high to be the drawn liquidity for it to move there. Now that we're above the drawn liquidity, right? I would think that it needs to, right? If you're at an FEG, it moves to the opposite side. So if you're at an FEG, you're looking for it to move to a swing high or a swing low. If you're above a swing high, then you would be looking for price to move to an FEG, right? So now that we're above the swing high, look at this unfilled FEG here. Right, so I get it from the higher time frame. I'm only using FEGs or swing highs or swing lows. When price is located at one of the locations, I look for it to move to the opposite. When you trade crude oil as futures while you trade gold as spot commodity, I do trade oil. It's very rarely. It's happened once or twice. I don't trade gold. So just to clarify, it has to be a close above the breaker and not a market structure shift for us to consider. When I'm looking at breakers, I'm looking for a close above the breaker. The breaker and the market structure shift can be two different locations. I'm not looking at the market structure shift. I'm looking at the breaker. Now, if it doesn't close above the breaker, that means it's weak. If it does close above the breaker, that is a stronger sign than if it did not. What about fundamentals, COT and bonds? Can you explain it to help us with bias? I don't look at those. I don't use COT. I don't look at bonds. Again, less is more, quality over quantity. I focus on time and price. It's the only two things I focus on. I couldn't even tell you what the bonds are doing right now. The commitment of traders, I couldn't tell you if they were long or short. I truly don't use those. Am I out of New York City? I used to be from New York. I moved south. New York definitely has the best bagels and pizza, so I will be going back without a doubt. So if I was in New York, I would go grab a cup of coffee. I'm no longer in New York, though. Sorry I'm late. What's happening? Welcome. It's alright that you're late. We're just having a conversation. We're going over questions and interacting with everybody, trying to answer questions today. After that, we have, is it okay if you enter when you see a unicorn in the 5-minute time frame but not a 15-minute time frame? Yes, that is completely okay. Ash, what about your Dixie bias? Here's my Dixie bias right here. This is what I'm looking at on Dixie. Again, it's always going to be the same exact concepts. Everything that I'm saying here is exactly what I'm using. Oh, why is that cute? Let's make that straight. There you go. And again, if you're not in the Discord already, you should join the Discord and you would have already seen this information. Right, so if Dixie is at a weekly internal location, it's at a bearish FVG, I'm looking for Dixie to move external. All I do is use internal to external relationship. All I use is FVGs or swing highs and swing lows. If price is located at one of the locations, I look for it to move to the other location. Since Dixie is at a weekly bearish FVG, I will be looking for Dixie to go to the weekly swing low. Exactly as I'm outlining here. Right, the arrow's pointing downwards because that's where I'm looking for it to go. This is my draw on liquidity for Dixie right now, this swing low. Do you already depend on something to decide your bias or just external to internal? I only use the external to internal. Hi Ash, as I understand, for a bullish unicorn, we put our entry at the high of the highest up close candle between the stop hunt and the swing low. I'm asking because I saw at a PDF, page 3440, putting an entry at the common point between the FEG and the breaker and not the high of the breaker. I would have to disagree with you. I will gladly go look at the PDF again, but I only have one entry location, so that's why I'm disagreeing with you. I use the breaker as my entry location. The beginning of the breaker is where I enter. Stop loss goes on the other side of the breaker. It's always been that way. It's going to stay that way. So I'll go look at the PDF again, but I could almost guarantee you right now because that is how I trade. Thank you for answering my questions. I appreciate the value you're providing. Yeah, thank you for joining. If you do have any other questions, feel free to ask them. I'm gladly willing to hand out any and all information, so we just have to give it time because we're not going to be able to get all of the information done, in one day or 1 week. We have to be patient and continue to strive to learn. What is the time zone for this asset for trading? New York, UTC 5. All the charts, doesn't matter what asset you're on, you should be on New York time. I just lost my spot again. How's it? Oh, here we go. Appreciate all you do, Ash. Thank you for joining. I appreciate everyone being here. On bias, you use the daily for bias, but what if you move to the 1 hour and it looks bearish? If order flow is not aligned with your bias, then you know to not do anything. Anytime any of the information is not aligning, that is the first moment in time you know not to press any buttons. So if you're getting your bias from the daily and your daily bias is bullish, but you're on the hourly and the hourly market structure is bearish, then you know don't press any buttons. It's not the time to do anything. Wait until all the information aligns. Hey Ash, can we go to EU or Dixie? So we did just do Dixie. We can take a look at EU real quick. Let's pull up EU. I'm not sure if you were looking for something certain with EU, but I did just go over Dixie, and here's EU. Personally, I would not be shorting here. This is what I would be focusing on here, right? It's the same exact thing as always. This is what I would be looking at on EU right now. We're at a weekly fair value gap. If we're at a fair value gap, you'd be looking for it to go to the opposite side. So personally not interested in shorting EU is what I would say for EU. Alright, and you have the daily fair value gap here too, so same thing on the daily. Ash, what if we didn't hit a FEG inside a breaker? If there is no FEG aligned with the breaker, then I do not touch it. All of the criteria needs to be completed. Any other time criteria is not completed, I do not touch it. Do you use RDRB? I do not. Is scalping from futures chart that much better than regular charts to scalp futures charts? I need a prop firm. Futures is, you're going to see a lot less slippage or spread on futures compared to FX. So I would suggest going with futures. I'd personally use futures, and I would suggest using futures. How do you decide where to put your stop loss? As a beginner, you should give yourself more room for the stop loss. No matter what, the stop loss goes on the other side of the breaker block. Whether you put it 1 point, 2 points, 3 points, 4 points above the breaker block or below the breaker block, it always goes on the other side of the breaker block. Now, depending on if you're a beginner or very experienced, you should be giving yourself more or less room. It always goes in the same location. The amount of room that you give it is depending on your experience. You have to make sure you size appropriately. So obviously, if the stop loss is larger, then you need to have a smaller position size. One more question. How many candles after the displacement above the breaker can the FEG occur? The FEG has to be aligned with the breaker. It's not an amount of candles above or below the breaker. There's no amount of candles that matters. What matters is the FEG needs to be aligned with the breaker. Do you always give some space to your SL? Yes. Give yourself some space. It does not have to go directly on the other side of the breaker. Give it a couple points past the breaker. Give yourself some room to breathe. Right? It's a classic saying of ICT, right? Wicks do the damage, bodies tell the story. So you don't want to get wicked out of a position just because you're trying to tighten your stop so heavily so that you can have more size. Give yourself more room. What kind of risk management would you recommend? You have to realize that there are micros and minis, right? So you're saying that that amount of points would be too much risk for a top step challenge, right? So if that is too much risk, get off of this chart, right? And go to the micros. Get off of the minis and go to the micros. Understand position sizing. you can easily take that position, right? So I believe you're talking about the NQ position that we just analyzed, and this is the position that we were analyzing. So you're saying this much room for a stop loss was too much. All right, so let's take a look at it. All right, so 40 points. All right, and now we'll pull up the calculator. I'm not sure if you guys are going to be able to see the calculator or not, but I pulled it up. 42 points on one contract of a mini, right, would be $840. Because each point on one mini is $20 per point for NQ. So this stop loss would be an $840 loss. If you used a mini, you need to position size correctly, so we'd have the same exact position, right? But we'd move to the micro, right? Now, each point is worth $2. So 42 was the amount of the stop loss. The stop loss was 42 points wide. Now, one contract on a mini is only $2 per point. That would only be $84 of risk. Right, so don't understand risk. If you're not capable of risking on the micros, move to the minis. Okay, so everybody has their own risk tolerance. Everybody has their own location in, the size of their accounts or the prop challenges that they're doing. You need to risk correctly for where you are at in this process. So either use a mini or a micro to change that amount of risk. The stop loss should always go in the same location. So if this is too much risk being on NQ, then move to MNQ. Does the leg that took liquidity all have to be the same color? No. Can you use projections for TP using OT? You can use projections. I personally don't use projections. I'm looking at risk to reward for my TP. I'm always looking for 2R. Depending on what 2R is, that's where I set my TP. There was the same setup on ES this morning. This morning I'm not even interested in looking. We have FOMC coming up, so personally I don't see any longs here at all anyways. Alright, like if maybe this is what you're looking at. Down, up, down, all the way through. But there's no FVG. There is a little FVG in, so maybe you are correct. This still doesn't interest me at all. There is an FVG right here. It still doesn't interest me at all because we're not just looking for a pattern, right? Understanding the narrative of FOMC coming up, you would know that this is lower probability because price is going to anticipate FOMC. It's going to wait for it. It's going to build liquidity on both sides, right? Like, look at, you have both equal highs here, 1, 2. You have both equal lows here. They're building liquidity on both sides of the market for FOMC. This indecisive chop is not something that I want to participate in. So it doesn't matter what is on the screen because I know that I'm not just looking for a pattern. I'm understanding narrative as well. Does the leg that took liquidity all have to be the same color? Oh, I did just read that comment. No, it does not have to be. Do you scale in at all? No, I don't scale in. I have one entry location. It's the beginning of the breaker. I have one stop loss location, one TP location. There's nothing else that I do. If you guys are following me, there's nothing that I'm hiding behind the work. Everything that I write down is my actual actions. The accuracy in the information needs to be there, or else the practice for myself is not going to be good. right? Like I'm doing this for myself, and that's why I don't have any like paid, premium groups, because I need to practice the skill for myself, and the repetition of trading is what I'm doing this for. I need to learn the skill for myself. Documenting it publicly so anybody else that wants to learn from it can. Ash, can you use this during PM opens? You could use it during the PM as well. I'm just not a PM trader, so I personally don't. Yes, you can use it during the PM as long as it's during the kill zone. Open the translation, please. I'm not exactly sure what that means. Is there like a button that I can use for translation? If you can let me know what that means, I'll gladly do it. I'm just not sure what that means. Which ICT playlist did you think helped the most? 2022 mentorship is the one that I would focus on. I'm using FX Replay to backtest to help me identify the unicorn setup during the London Open. FX Replay has a go-to function which enables you to fast forward to your chosen kill zone. As long as you don't see the information beforehand, that's why I'm saying do forward testing instead of back testing, because you don't want to know what's coming, right? Like you want the real live experience. And if you already know what's happening, then you're gonna understand what to look for. But if you're in live market, then you don't know what's gonna happen next. That's why I'm saying forward testing is better than back testing. Why do you still work? If you're talking about a job, I'm not sure what you're referring to. Work in the markets, work for a job. I'm working right now. I mean, I'm always working every week. I need to provide for my family. That's the direct answer. Why do I work? I work to provide for my family. Thank you. I have a similar trading background. Much appreciated for your time and answers. Anytime. Yeah, like I said, we're definitely going to keep doing this. 50% watching. Do not like this free stream. Winky face. I appreciate it, Tomas. It seems ICT main skill is on bias. Bias right, trade is right. Would love to know your bias process with Dixie starting off the week. So I went through the bias a couple times already. Hopefully you were here. If you weren't here, then this will be uploaded afterwards for anybody else that wants to watch it at another time. I do have to disagree with your statement though. So many times you can get bias right and you can still get stopped out. There's many times that you can get bias wrong and you can have a profitable trade. So I don't fully agree with you. But my process in determining bias has I've done that multiple times this stream. So just watch this video over and you'll get it as well. With the 930 to 940 macro price sometimes. 930 to 940 is not a macro, just so you know. WP gal. 930 to 940 is not a macro. 950 to 1010 is a macro. But 930 to 940 is not a macro. I don't know if somebody else made that up, but that didn't come from ICT. Am I entering unicorns at the opening times? Yes, that is the time that I focus on. I'm very interested in the opening times. I'm just making sure you know that that's not a macro. I do not use the redelivered, rebalanced PD array. I don't use it at all. Is the unicorn model more successful in London or New York? That's completely contingent upon the trader. You can get a model correct and still not manage it correctly, and then you have a losing trade. So in terms of if it's more successful in London or New York, that's dependent on the trader. That's not dependent on the model. How much FEG we need to confirm the unicorn? The FEG needs to be aligned with the breaker, whether it's aligned 20%, 30%, 40%, 100%, it just needs to be aligned with the breaker. If it's not aligned with the breaker at all, then it's not a unicorn. Thank you for breaking all this down. Yeah, hopefully I'm bringing some clarity to these questions. If I'm not, you can go to the Discord and we can try to figure it out there, or we can wait for the next stream. Like I said, it's going to be weekly, so if both of those locations don't work, I have an entire YouTube playlist where I've walked through the entire model in separate videos one by one, and I'm also documenting this daily on Twitter. So you get many different options for education or information, and the links of those are in the description of this video. So I am going to start to wrap up stream. We've been here for an hour and a half now. If I did not get to your question, please just either bring it to the Discord or to Twitter. I will gladly continue to do my best to get to everybody's questions. You will continue to see me documenting this journey and providing more live streams. The link to all of the different socials are in the description of this video. I really appreciate everybody joining today. Like I said, I'm going to start to finish up the stream. So we have FOMC coming up in 30 minutes. I highly suggest everybody just sits back and watches. Do not try to hit a home run. That will be the easiest way to hurt yourself. FOMC is just not something to mess with. It doesn't matter who you are. It doesn't matter if somebody else is and you're not. Just understand the risk. Understand that there's clearer times, there's better times, there's higher probability times to participate, and that is not FOMC. So just sit back and watch. Again, if you didn't already, please subscribe to the channel. Please like the video. That way you can be notified for the next live stream or the next video that is uploaded. All of the links to the socials are in the description to this video. I really appreciate everybody coming. I hope everybody has a great week. Let's continue to keep working and learning, and I hope to see you on the next live stream. Thanks, guys. Have a good day.